Well, just when we thought it was might get better, it got worse. Today was another just terrible trading day of these tight ranges. But the worst part about today was not only did we have a nice tight $3.16 total range for the day, we just had these crazy long wicks and reversals, and we had this massive $2 dump right here out of nowhere that then recovered just as high of the candle after. Just another terrible, really hard day to trade today. So something that I'm watching here on SPY, which I'll show it up here real quick so you guys can see it, is we have the diamond pattern formed here. So you can see using this line right here, this one, this one, this one, we form a nice diamond pattern. So this basically is a breakout pattern. So if we break down, I expect a pretty big drop. If we break up, then we should be pushing up here. So that's a pattern I'm definitely going to keep an eye on, and that's one of a bigger pattern that I always look for because it usually does have a pretty big move. The biggest thing that happened today is we broke down. We did touch the daily AMA and we closed nice and over it. We did close pretty much directly at 394.6. Really 394.2 to 3 was my bullish bearish pivot point. So closing over that, I do favor upside. So basically the biggest thing I'm watching here on SPY at least is that from 394.6 to 398.5 right here, we have had 1, 2, 3, 4, 5, including this, closes out of the last 7 trading days. So this is a really tight range, and you can see we have one outlier up here and one outlier down here. Being that 390.1 did hold right here, it does show that we should retest the daily 200 EMA. But the issue we're running into right now in this market is that people recognize that we are so high up in this overall bear channel, up in this 25 percentile up here, that nobody wants to buy more. But people also recognize, well, we could go higher, so they don't want to sell just yet. So we're kind of at a part now where nobody wants to buy, but nobody wants to sell. So now we're just kind of stalemated. The biggest thing that's coming up here is the FOMOC minutes on Wednesday. That could be a pretty bearish catalyst. And actually, historically, if you look at the timing of FOMOC minutes and peaks and troughs on SPY, it's usually pretty much correlated with that. So there's a chance here that FOMOC minutes could be our top, and we could confirm our top here, and we could see a breakdown heading into the next CPI and FOMOC in December, or it could end up being the move up that we need. So it'll be definitely interesting kind of see what happens after Wednesday. Biggest levels to watch here is this 394.6, and then biggest resistance is 398.5. From there, the 200 EMA at 401.3, and then big support at 390.1. Going over to futures. So this was actually the 7th doji candle close on the daily in a row for futures. So the same thing, we do have the same diamond pattern here. Oops, that's not the right one. Sorry, it's this one. Diamond pattern forming here on futures. As you can see, if you connect the dots right there, nice diamond pattern right here formed. So here we actually are holding that support, and that support is going to be right here at that critical 39.55 support. And we are trying to break through the resistance already here. So if we can break through that resistance line, then I'm going to be looking for the upside. And I'm trying to adjust my line slightly. So we did just poke through it a little bit there. So upside resistance to watch for is 4,000. So basically the same thing, and it's even more clear on futures here that of the last, and this one even closed at 39.61. So really of the last 8 trading days now, all of our closes have been between 39.55 and 4,000. So really, until we break one of these levels, we don't really have a sense of direction. We're just kind of chopping. So looking at Tesla here, oh, I deleted my bear channel on accident. So let me put that back on for you guys here. I took it off after I did my written TA. So here is the bear. So this green bear channel right here was broken today. As you can see, if we zoom in, you can see that we did break through it, which actually, interesting enough, before we broke through it, we did bounce really hard off it. And we actually were kind of convincingly pushing up. But then SPY, everybody had a really big drop at the same time, kind of out of nowhere, really. It was really kind of weird, actually. But so now that we got rid of this bear channel, we really are just left with the red bear channel. So this is kind of what we're going to keep our eye on. And something else that's really interesting here is we have this red falling wedge, this black and red falling wedge, and then a blue falling wedge all together. So let me see if I can pull this up quick enough here to talk about it. But I did some analysis on Tesla for all its drops it's had lately. On average, dating back to September 21st, when you look at these like drops from here to here, and then recovery, and then we drop, and then we recover, and then we drop, and then we recover, we drop, recover, drop, recover, drop. On average, we're averaging 6.6 days of dropping. If you included the current drop, otherwise it's 6.8. So call it 7 days of dropping. And on average, the drop is 17.7%. If you include current drop, or 17.9%. Currently, we are looking at 6 days of dropping, and we're already dropped 16.6%. So potentially this could actually be considered bottom here, and we could be looking for a recovery if we just look at the historical trends of the data, not including obviously the news and macro that moves Tesla. So basically what I'm kind of looking at here, by November 29th, which is right here, looking at the analysts of the recovery time, which is on average about 4 days, and it's usually about 11.8%, we could be looking at Tesla moving somewhere from 185.2 right here all the way up to 186.8, which if you look is a perfect rejection right there at this red falling wedge. So I'm kind of looking for a recovery tomorrow. We might get a nice double bottom here, possibly at 167, or we might just open up maybe kind of sort of like here and just push. We didn't quite touch this support line right here. That would have been at 165. We could go down to tomorrow, which is 163.8, it'd be about a $4 drop. And then we could push up, but I'm going to be looking for that tomorrow. So key resistance to watch tomorrow is going to be 175.9, call it 176. Key support will be 167.6. So looking at the VIX, we actually broke all the way through our support line that dated back to the August peak and then our peak here in November on the VIX. So interestingly enough, the last time when we peaked here was on August, So when we look through here, we are at 22.3 now. This is the lowest the VIX has been since Jackson Hole. And if you remember, Jackson Hole was on back here in August, right here. We opened that day at 419.39. So that means that the last time the VIX was really at this level was Jackson Hole, and the SPY's price was actually about $20 higher than it is right now. So basically the next big level we're going to kind of look for here, which we might be going for this gap fill that we still haven't really filled here, would be 21.28. From there, we're going to get to that really major support area, about 19.7, which if we hold this channel, we could be getting there about the time of FOMOC. So, but with FOMOC minutes on Wednesday, it'll be kind of interesting to see what the VIX does. I'm actually kind of surprised to see this unwinding like this with FOMOC minutes coming. I would have expected at least a little bit of a push up, but maybe that will come tomorrow. So overall, it's really tough trading right now. If you don't need to trade, like you don't need the income, or you have a smaller account and you're really struggling, I do recommend paper trading still. And I really do recommend just, taking some time off if you need to. There's no reason to let your account in this bear market, which everybody knows this is one of the hardest markets to trade in really over 50 years. That is what all the analysts say. There's nothing really to gain and everything to lose. So, if you're struggling, don't be afraid to take a little bit of time off to kind of regather yourself, or even if you don't want to take time off and you want to keep trading, size down, trade one contract, be consistent with one contract before you go to 2 and then go to 3, and then just start at 1 and just size your way up until you get to a level that you're like, okay, now it's too much and I feel nervous when I enter. So, just kind of be careful, protect your profits and protect your capital. Another thing to be interesting here is that Bitcoin actually did go all the way down to 15.479 today, which actually is lower than this is the FTX crash right here, right before CPI. So interesting enough, we actually poked through that, and we did even close our candle below that level. So now our new level of crucial support here is at 15.7 on Bitcoin. If we lose that, and if we follow this trend that we're on here, we're still heading to that 11 to 12K range on Bitcoin. So I'm watching that closely. This could be sort of a premonition to our next leg down in the market too. All right, hope you guys had a good day. Remember, I am not trading tomorrow. There probably will not be a pre-market, but I will be back on Wednesday. And I'm going to post the FOMOC minutes trade plan to the pre-market right now. Thanks for tuning to this video, guys. I hope you guys enjoyed it. Don't forget to hit that subscribe button to stay updated to my videos. This is the Lifetime Discord link. If that does not work, go ahead and drop me a comment or send me a message and I'll get you a new one. On the Discord, I do pre-market update with key supports and resistance from overnight. I also do live analysis and commentary throughout the day on SPY and Tesla. And I also do my live alerts for call-outs for plays that you guys see in my daily log. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh.